We've just seen a World Bank report reveal that Kenya's 2010 GDP growth is seen coming in at 3.5% next year, faster than the projected 2.5% for this year. Are you as optimistic about the road to recovery for Kenya?
I mean, obviously, we've seen credit extension come off this year versus last year's levels, despite the fact that the central bank decreased their rates by 75 basis points to try and spur extension to the private sector. We're also seeing an increase in the non-performing loans of the banks, of the banking sector in Kenya, and flat earnings. So we really need to see the banking sector take appetite for credit and risk in Kenya next year in order to spur that growth. But we also need to see, obviously, tourism pick up and the ongoing issues with the drought and the impact on agriculture output hopefully be resolved. But it also resonates with the climate story and deforestation in Kenya, which obviously has adverse impact on water levels and the drought.
Well, Aly-Khan, let's start at the top here, where Stefan has highlighted one of the primary factors to consider heading into 2010, and that's the banks starting to lend more easily moving into 2010. It's one of the key factors considered to grease the wheels of the economy as we venture forth here. We know that the Central Bank of Kenya has certainly applied a lot of pressure on banks to lower their interest rates. What's your outlook in that regard? Because banks have been pretty resistant in what's been difficult times.
Absolutely. We've had a lot of issuance from the government of Kenya, and the banks have been quite happy to park their money in government of Kenya paper and run the carry. And I think, you know, they somehow need to be encouraged out of that position. We've seen a severe contraction to the private sector, a severe contraction to households, and really I think, you know, that's a key issue for the economy going forward, because it was credit which fueled a lot of the growth from 2002, 2003. I think they've tried, you know, they've tried at the edges, they've reduced the CRR requirement, but they've got to get a whole lot more aggressive. And I would be suggesting that they actually flood the front end of the money markets with a lot of cheap money in order to bring the yield curve down and encourage banks to lend.
Having said that, and given the fact that we are coming off a very low base where we saw post-election violence rock the economy, the global economic crisis hit, and then the lack of rain as well, disrupting the agricultural sector quite severely. Looking at the growth rates moving forward, what's your target for 2010?
Well, I think I come slightly higher than the World Bank. I'm looking for above 4%, and I think it's because of the low base effect we've had in 2008, 2009. And I think if we get a confluence of reasonable weather, a bit of more aggressive lending into the private sector, I think we can hit those numbers. But the key in all this, I think, is the government spending. I mean, you know, they've raised a great deal of money via the infrastructure bond market, but that money has not hit the ground yet, I don't think. And the question, I think, to get those numbers up to 4% will be driven by how quickly the money hits the ground in the economy.
Well, certainly, Stefan, looking at this report this morning, I mean, the growth forecast is being attributed to growth in the services and industry sectors. And when you talk about industry, I mean, a front of mind for me is the cement players. As Aly-KhanSatchu was saying, you know, it's those that have been involved in the infrastructural side of things that are clear to reap significant benefits moving forward. We may not have seen it as yet. Are you looking to see quite a severe uptick amongst these players in 2010?
I mean, our view is that obviously you had phenomenal growth in cement consumption, infrastructure-related spending on the infrastructure and as well on the retail side of the economy in Kenya over the past decade. You know, I guess the macro question you have to answer for yourself, are this sort of growth of rates going to continue in the next decade for the infrastructure sector? Obviously, as Aly-Khan has mentioned, you know, very strong take-up in bonds, infrastructure bonds, means that the government has the money to spend it. As Aly-Khan says, they must now spend it. But obviously, I think it's going to be a bit, it's going to take a bit more time for it to reflect and I wouldn't be as bullish for 2010.
Before we venture forth and look into some of the other sectors, Ali-Khan, I mean, we're looking at this activity that should filter through to the markets themselves. But with the strong infrastructure development focus we've seen by government, we have seen, as we've mentioned, government really embarking on capital raising initiatives via the bond market, and that's stealing a lot of investor attention. Do you see the primary and secondary market actually playing a severe game of tug-of-war next year?
Well, I think, we've had a lot of primary issuance. We've had great attempts to make, to bring liquidity to these markets. They were very illiquid. It was bank-to-bank type trading. Now we're putting a lot of these bonds on the NSC automated trading system. So I think we're seeing a lot more volume come through on the automated system, and I think that's got to be a positive. There's a lot more interest, but I think, from the government's perspective, the key really to achieving a higher rate, a higher trajectory of growth is about bringing this yield curve lower across the board, and I think that's what they've got to work at. I think that's what these initiatives are trying to achieve. The question is how quickly they can achieve it. Inflation at 5%, bonds at 12.5%. You do not get 750 basis points carry over inflation in many other countries in the world. It's anomalous. It needs to be, something needs to be done about it.
Well, let's, on that note, track in and hone in on some of the specific sectors. You mentioned, Stefan, tourism a little earlier. Of course, it is a big component of the services sector, and we know that it's a big contributor to overall GDP as well. We've seen reports suggest a pickup here now with the political climate starting to stabilize somewhat and the global economy back on somewhat of a recovery path as well. What's your outlook in that space?
I mean, I think obviously, 2010 is going to be the year of Africa with the World Cup coming. There's going to be very positive sentiment towards trying to visit a lot of countries on the continent. So, I wouldn't say there's a direct impact. Johannesburg and Nairobi are 4 hours apart flying. So it's not as if you're going to, fly off to the Kruger between games. But clearly, I think there's going to be a positive effect. And obviously, if the global economy recovers and there's a positive sentiment, then we'll start seeing tourism numbers recover. So certainly a lower base, as Ali-Khan said, for 08 and 09 after the global recession and the political fighting after the election in 07. So obviously 2010, I think, is going to be a much brighter year.
Well, of course, Ali-Khan, we have seen government embark on quite a few initiatives in terms of marketing Kenya as a tourism destination post that post-election violence. Let's take a look at those strategies and how you see it working, because they've looked at non-traditional markets throughout this year.
We've seen a good bounce in tourism. It's about up 28%, I think, year on year. Admittedly, it was a very weak year the year before, but it's improved substantially. They're obviously trying to source newer markets, Asia, the Middle East, and I think they haven't got significant traction yet, but there's plenty of potential in those markets. I would also encourage them to look more out of the box. We've seen a lot of advertising on CNN and places like that. I think there are plenty of other places to focus on and get more money, more value for the money, for the dollars spent. But overall, I think tourism has come back quite strongly. I mean, you can't get a bed at the coast. It's cheaper to fly to Dubai and come back, frankly.
Well, looking at the backbone then of the Kenyan economy, the agricultural space, Stefan, contributing 25% to Kenya's GDP. I mean, what are the prospects looking like there? Because one of the major risk factors in that regard is the rain, and that's something that, everyone has very little control of.
I mean, I think it goes back to climate change and deforestation, which has been quite a serious issue in Kenya, and also the politics around it, of, the Prime Minister and whoever the other players making serious decisions about how to address those issues versus just taking political stances. So, until those type of issues are resolved, we're going to have, over the long term, we're going to have structural issues with agriculture and obviously with the rainfalls. And, that's going to be quite negative, but obviously we're seeing levels of water and, of rain coming back, so it's going to have a positive effect in the short term, but obviously it's quite difficult to predict the weather.